Monday the 26th, and this is the weekly recap on the two rhinos that are currently on November and December. This is the November one, which, if you have followed me on Slack, I have de-risked substantially, considering that a 2% profit should be protected. So we have now an upper expression line to 3725 at 940. And we should probably get, of course, by de-risking the trade and reducing, as you can see, capital usage to next to nothing, the upper expression line is, of course, but the Vega is nothing, flattish delta, so I can probably keep this trade at least until end of the week. And today is 25 DTE. Normally, with elections coming, I would close it on Friday, but now that I was requested to de-risk the trade, I may actually keep it a bit longer. If the market then falls, I may get back into the sweet spot and make a little bit over $1,000. So either I tweak the trade to increase the expression line a little bit, but otherwise the trade is fine to keep as it is with no adjustments. So this is my trade log. All the screenshots are on Slack. Basically, over the last week, I just de-risked the trade. Okay, so this is November. December is in a good shape. Normally, when November is in descent phase or approaching descent phase after 28 DT, I start reallocating, and I was a little bit hesitant here about adding more capital to this trade. I would probably, generally, your comfort zone dictates that you should go for additional broken butterfly. So, and as time goes by, you start reducing. Normally in high vol, I start with 125/100 wing size, and then maybe at this stage I would go back to 100/75. So let's see what it would be doing with an additional broken butterfly here. This is something that does make sense. I would get a little bit of a credit. So that's something that we can consider. Now, with volatility playing such a real weird behavior, at the moment we see that the Vega risk is spread south of money right now. So yes, I would reckon that most broken butterfly traders would go this way. That said, I would definitely try and spread the risk more on the upside. I know the SPX-VIX correlation has not been ideal. Currently, it is at minus 30%, which is not great. You can have a look quickly. This is how it looks. It's been hovering about minus 30% lately. This is not a normal market behavior, but this is not a normal time either. Going back to the trade. So if I do that, I would probably even raise it further with more Vega, but spreading it out a little bit more. As you can see, my maximum Vega is now more around this area, and then we would also get to about $1,000. There's not much to gain here. It's not even just over $1. So of course I could place it a bit lower, but for simplicity I would place it here, and it's also way above 1SD, even though 1SD on the upside looks like a remote probability at the moment. So I could do that. The other option is to go simpler and just go for a wide condor here. That would also put more Vega on the upside. So again, assuming volatility, and volatility should decrease. So adding Vega now does make sense. Of course, we can maybe look for a vol pop, and there was one on Thursday. SPX went down to the low 3400s, but this would probably make more sense if volatility now goes back to its normal behavior. So this is also a much better credit. So unless the market falls, and of course this would be detrimental below the PCS, so you can see it here. So this is something that we could do, and it does have, I do favor this type of adjustment at the moment, but mostly because of the spreading of Vega risk. So this is what I have in mind. I do have another trade here, which I initiated not so long ago. Basically, it was a calendar, but I've actually diagonalized one of them. So this, in a way, this is my hedge for my main trades, and this one takes about $10,000 of planned capital. So that one is okay. So I kept a call calendar on 3600 to left a little bit so that it's not too delta directional. And here I've got some put calendars on 3300, 3200, and I have diagonalized one of them. Okay, that's it for now. Again, I invite you to follow me on Slack. It looks like we have some data issue at the moment. I don't have data for my call credit spread, so this is obviously anyway. Those things happen outside of market hours. Okay, thank you for watching, and bye for now.